Intel is gapping higher as they reported quarterly earnings and returned to profitability in the second quarter following 2 consecutive quarterly losses. The results got a boost from the PC segment, which has been battered in recent quarters, but is now showing signs of recovery. The stock is showing recovery as well. Let's look at the video before we continue the analysis on the charts.
Shares of Intel this morning, we should break that down for you. They're continuing to gain in pre-market trading. That's after reporting a return to profitability in its second quarter following 2 consecutive quarters of losses. The chip maker saw revenue at $12.9 billion in the quarter, beating analysts' expectations, but still 15% lower than revenue in Q2 2022. They also had an adjusted earnings per share of 13 cents. Now, this beat for Intel, it was driven by signs of recovery in the PC market as well as AI hype. And if there's anything that this company did lean into, especially over the course of the earnings call, I was looking through that and particularly what some of the PC consumption trends are looking like. It's not that it's a major rebound that's being initiated. It's really just a slowing of the bleeding, if you will, in this market.
Yeah, that was my overall takeaway as I was looking through Intel was things have stopped getting worse.
Sure, yeah.
It doesn't necessarily mean that they are getting better, right? To your point, revenue falling year over year, but did rise a little bit quarter over quarter. The company's forecast is reassuring. Sales in their PC chip division did still fall by 12% in the second quarter, but they still made more in that division than they did in the first quarter.
Yeah.
So year over year, still seeing declines. Quarter over quarter, seeing a little tiny baby improvement in some of these areas. The company's data center and AI division sales fell by 15% to $4 billion. And, you know, there's that question as well of where Intel sits in the AI stack, right? NVIDIA, which makes GPUs, which is being used to fuel and power a lot of these AI developments. Right now, demand for that is outpacing CPUs, which is what Intel largely makes. They do make some other types of chips, but largely CPUs that go into PCs and go into different types of processing. So Intel does have a role there, but it's not the highest demand place right now.
Well, there's going to be a multiplier effect on data centers as well as a result of generative AI or the broader wave of AI that we've seen come forward here. And for Intel, they've already broken ground on some significant efforts to make sure that they are being able to not just fabricate chips, but also build out their data center ability as well. And it'll be interesting to see where they continue to position themselves. They're saying they're well positioned to capitalize on the significant growth areas across the AI continuum by championing an open ecosystem and silicon solutions that optimize performance. So I kind of looked at that to say, all right, they're building out much of this capacity both in foundry production but also in the form of data center. And it's just a matter of when investors can see that expect it to come online fully and service customers. But it sounds as of right now, they're confident about that positioning going into even more of that demand to democratize AI from the cloud to enterprise and edge and client, as CEO Pat Gelsinger had put it. But again, I mean, still down kind of year over year across the board. And for Intel investors wondering, why the stock is moving higher, there's also a clear acknowledgement that they beat on what was extremely suppressed guidance as well.
Yeah, definitely. So again, things are getting less bad.
Less bad.
What's also worth noting is that they did slash their dividend 65%. The CEO took a base pay cut. They did lay off, and they did restructure their manufacturing division. And with that said, not only did it gap today, Intel has bottomed. And for that, it gets a smiley face as price on the monthly chart now has definitively closed above the key resistance level at $32, definitively closed above the 13 simple moving monthly average. go to the weekly chart. Where you can see that the $32 was resistance. We had a false breakout to the upside before price pulled back. And price is now in a nice uptrend. Higher high, higher low. High high, high low. Look for price to take out the most recent higher high at 37.19 in the coming weeks. Look for your next target to be resistance support at the round hole psychological number of $40. Thanks for watching. Subscribe. Please like the video.